Hi everyone, I hope you are doing well. And from the past 6 months, as we know that the participants, new retail investors, they are entering into the market and they think that they can make money from the market. It is very important we should know the basics and how the stock market works. Before we get into stock market, we should know what are the factors which influence the market and who is going to regulate that market to make sure that every transaction is perfect and there is no any default. Before we go further, if you like the video, please share and subscribe. Don't forget to press bell icon. Let's see how it works. First, there are few regulatory body which works behind the stock market. The first one is the SEBI. SEBI is Stock Exchange Board of India. It is a regulatory body which sets the rules of the game and which make participants to adhere to the rules and regulations. The main objective of SEBI is there should be a transparent transactions and there is no unfair transactions, and it is not going to allow the people to make any unfair transactions. Then the next is depositories. Depositories are there are two depositories that are there in India. We'll discuss that later in this video. The function of depositories is once you purchase your shares, what will happen? You will get the shares in electronic form which will sit in your demat account, which is called dematerialized account. So these depositories which plays major role which holds your shares in demat account. The next participant is depository participant. They are also called as a broker, and their function is they are the connective link between the market participant and depositories. If we want to purchase any shares from the exchange, we will go through the depository participants, so called brokers. Via brokers, they will allow us to trade indirectly to the market. So depository participants which provide us a trading platform to purchase, to make a transaction, and they will be in touch with depositories to make a settlement. It means to say, if you purchase some amount of shares, these brokerage firms, they will be in touch with depositories. They will settle the amount of shares that we purchased and they will deposit those many shares into our demat account, which is held by depositories. And the last one is market participants. Market participant may be a domestic retail investor like us, and there it might be a asset management company. These are the big institutions which collects money from the people, and they will, based on the fundamental analysis of the companies, they will invest. And there is also a domestic investors and also a foreign direct investment who is purchasing shares and who are non-resident of India. This is how this system will work. And why company is going to listed in exchange? What is the need? Why they want to list it on exchange? One is the main requirement is money. They want to raise a money. There are reasons to raise a money. One is they need capex requirement. The capex is nothing but capital expenditure. They are going to expand their project. For that, they require money. In order to meet that requirement, they will list on exchange. And second thing is the company is having lot of debt, and whatever the profits they are earning, a part of the profit is used to serve those interest which is borrowed on borrowed debt. So in order to get retire from the debt, they are going to raise the funds through public market. Then next one is opportunity for early investor to exit. Maybe once when it was private limited, there are only few investors who contributed to that company, and they have witnessed the rise of that company, and they want to come out of that company. So how they are going to do that? By selling their shares, by coming out, by listing their company on exchange. And one more need is they want to increase their visibility. It is one type of marketing. Once your company is listed on NSE or BSE, and people are going to trade your company, and it will be known to the lot of people, it gives the market visibility of a company. And next we will see what is, from users perspective, what we are expecting from the market. Because there are a lot of opportunities to invest in a market like real estate, which gives good return, and few people, they will deposit their money in savings account or fixed deposits or post office. There are certain schemes which is offered by post office, and there are other such as gold. Now which is very, everyone is wondering why its price is rising. It is reaching a top level. But when it comes to equity market, the percentage return one should expect around 10 to 15%, and some companies which are giving more than 15%. It is based on the performance of the company, and the company, how we choose, what are the factors we consider while choosing a company. Then some companies which carries huge risk appetite, and which gives, if it is successful, whatever the perception that we have about the company, if that is a right, it will give high returns. That is what we expect from high risk companies, which involves high risk. And what we will see while investing is how its growth over the period of time. We'll look at the trend from past 2 to 3 years, how its revenue is. Is it increasing at what percent? And what about its profit margin out of overall sales that we consider? And how much debt they have? If they have certain amount of debt, how much profit how much profit they are using to serve that debt interest. So these points we will look at before we invest in any company. And good understanding of company's overall activities, we should look at products such as which are available in market, and how they are coming up with. If they are coming up with a new product, innovative product, they are making a very good product, and they are coming up regularly, which makes sense investing in such companies. Next, how companies will go public. What they will do, if I have a company and my company, I want to list it on NSE or BSE indices, how I am going to do it? First, I have to appoint a merchant banker, also called as a lead manager. What is his work is mainly focused on legal documents of company, and then he will submit registration statement to the SEBI. So whatever the activities the company is willing to do, if they want to go public, they have to be in touch with SEBI, which is the regulatory body which controls entire stock market. So they have to submit the registration statement. Next is DRHP, which is drafted hiring prospectus, which is a public statement, and we will see in next slide what all things it contains. Look at DRHP. The full form is drafted hiring prospectus. So it will contain how much is the size of the initial public offering, IPO. The short form is IPO. What is the size? It may be 100 crores, 200 crores. It depends on the company. and how many shares they are offering to the public. If we multiply number of shares with the share price what they will set, it will give the total IPO size. And how they are going to utilize these funds which are raised by going for IPO, how they are going to utilize these funds, and they will give the clear future plan, then the business plan which includes the revenue model, how the revenue model would be, and how they are going to expand, how they will also mention the expenditure plan in business plan. And also they will give financial statements for the past 2 3 years which are not available publicly because it is private company. They will incorporate this financial statement in DRHP. And what is the management view on future business prospectus, how the future of the company would be, and how the economy would be. That is all. It is about the macroeconomics as well as a microeconomics. It is about the DRHP. Next, we will look at the few regulatories which we have in our India. As we discussed depositories, the main function is to have our shares in demat electronic form, and we will open demat account in depositories with the depositories. In India there are two depositories. One is National Security Depository Limited and Central Depository Securities Limited. These are the two depositories that we have. Next one is brokerage companies, as I already said, which gives a platform to trade or make a transaction. Next is clearing corporations. What is clearing corporations? The main objective of these clearing corporations, it is to find a buyer and seller and match the total debit and credit and make sure that there should not be any defaults. That is the main purpose. And we have two clearing corporation. One is CSCCL, which is Central Security Clearing Corporation Limited, and one more is ICCL, Indian Clearing Corporation Limited. These are the two clearing corporations that we have in our India. This works behind. They will make sure that this will work in fraction of second, and we even don't know whether they are there or not. These are invisible, but everything happens at background. And thank you. If you like the video, please share and subscribe. Don't forget to press the bell icon. I will come up with next video. I will be explaining about what are the X date, how company once it is listed, once it submits its registration statement to SEBI, what is the procedure, how they are going to register, how they will set the price brand, and how subscription will take place. What is the importance of merchant banker when it is under subscribed, and the green shoe effect. These things we will discuss in next video. I hope you like this video. Thank you.